Good morning students, welcome back to today's class. Today we are going to see that Accountancy chapter 7, Depreciation, Provision and Reserves. This is video number 3. Through this we are going to see about that need for, first topic is that need for depreciation. Why do we need that depreciation? Is it necessary or not? Yeah, of course it is necessary. We need to find out that depreciation and depreciation amount should be reduced. So, first thing, why the first reason we can see as the reason by reason. First thing is that matching of cost and revenue. So, according to our accounting, generally accepted accounting principles, we need to go through that. The base of that or basic rules and regulation of that accounting is as the accounting concepts and conventions. So when we see according to that accounting concept and convention, we need to find out that depreciation and reduce it in order to match with that the cost and revenue. So cost and revenue here means is that actually according to our cost concept, when we are put use of something, for example, if I work this month, according to that the management should or the school must pay to me. Clear now? That is for that particular time. Means they uses my service for a particular time. For example, if it is for the month of June, means that expense they meet for us in the form of salary. For last month was August, no? Okay, if one teacher, you leave all things, whomever is free. Okay, if or me or any other teacher work here in the month of August, and that salary, there is a salary or wage is there, so that amount paid 5th of September. Okay, September 5th, that amount is paid. But if you will not consider that expense of the month September, instead of that this salary, this expense will considered as that for the month of August itself. You understand, no? Yes. Not only this matching concept, on accrual basis also we are taking the same thing. Here the service pool is used for the month of August, but salary actually expense they meet in the month of September. But in accounting terms, that is for the expense of which month? August. So the same is applicable in that asset also. That means if this asset, even though this blackboard we can use 7 years or 10 years. You understand? 10 years means its expense we no need of meeting in 1 year. That means we know that if we are purchase this board, then at the same time we need to pay that the complete amount to the seller, or from where we purchase it to them, we need to pay that the complete amount. We cannot pay this, we cannot say that okay, this board we are going to use for 10 years, so we will make that payment in 10 years. That is not possible. So instead of that, what we are doing, we pay that amount at once, but we calculate that this table, this blackboard, this board can be used for 10 years, and its price is at how much it may be? 2,000. Okay, 2,000. So we are making use of that 10 years. Clear, no? Yes. So we divided it with the 10. Then how much may be in 1 year? 200 rupees. That means we assume that 1 year, this is just one method only, okay? That detail you will say. For easy understanding only I use it like this. So for 1 year, how much we are making use of that board? We cannot find it is in any other way. We can measure it is in the monetary terms. That is why we took this is rupees 200 expense we paid or we made use of that board is at 200. You understand? No?
Yes, yes.
So that means in this year we could make use of that 200. That is why 200 we considered as an expense of this year for this board. Not that entire 2000. We never considered that entire 2000 as its a expense in a particular year. But at the same time, when we are purchasing that stationery, like pen or that whatever is that the stationery, small items, then we include it is in the stationery items only. That expenses we are meeting with that. Even though we are not fully using, if one pen we purchase it, that pen can be used for 2 months. Even though or some other things we purchase as stationery, or if one scale we purchase it, you know that that scale will not break easily. That steel, stainless steel scale, no, that we purchase it. You just imagine that we purchased it in the last year when you were in that class 10. You purchase it, or class 9 you purchase it. You use it in class 10 and class 11 or class 12. That is considered as a stationery only. So its expense we are not carrying for the further years. We meet that is in the same year. We write with the stationery. But in case of asset, it is not like that. If it is asset, the same way what we are doing, how much benefit we got, or how much we used that item, up to that value, how much revenue or income we got from there by using this, how much income, that it is matching that. Here you can see that in simple you can understand that service of a teacher. If he or she worked in a particular month and salary paid in that the coming month, even though it is considered as that the previous month. Here you can see that cost and revenue are matching with the same period. In which period that revenue, in order to earn that revenue, that item we put to use. Here you can see that this board may be used for 5-6 years. You understand? No? That means each year we are making use of that. We are getting some in order to earn that revenue. That means in order to, in case of business time, we call it as that we put this for what purpose? In order to get that in business purpose. Okay, in order to get that revenue. For that revenue, we need to meet some expense also. That revenue and the expense must be matched with the same period. That means the same way. How long time we can use? We take that years. We assume that years. This figure may not be that exactly. Okay, that year means this year, 10 year. We cannot say exactly, but we assume that this can be, normally it can be used for, if especially vehicle and all, when we are purchasing itself, there is a guarantee, is there, no? This much years guarantee means we know that how many years we can use. Maybe 15 to 20 years we can use that vehicle. You understand now? Like that each item, see, if we are constructing like that one building, there is assumption is that this much time, that means 50 to 75 years we can use like that building. According to that we are spending money. Clear now? So here also we are assuming only, not the exact. If 1 year may before it may get damaged, or 2 or 3 years more we can use, that doesn't matter. That all you will learn slowly. But here you understand that we assume that this is as 10 years. We can make this 10 years, and so the total cost we divided by the number of years. Then you get that 200 only. That means in a year we make use of that, or we write that expense as that 200 rupees. Clear no? That is cost and revenue. Got clear no?
Yes.
Next is that consideration of tax. That one another thing is that for paying the tax, you know that actually depreciation is considered as one of the expense itself. Depreciation is considering as one of the expense itself. That means that expense also come under that or we can reduce in the taxable income. That means after reducing that depreciation, we can pay that the tax. We know that over the profit we need to pay that the profit. If we are getting after all expense, how we are finding out that the profit? First we find out that the income, how much income, revenue we got, income or revenue. From that all direct and indirect we added, then we reduce that what all the expenses we are reducing. After we get that a result plus or minus. If income is more and expense is less, then that term we call as the profit. Our revenue is more than our expense. In that time we call that is profit. In case of business we call that is profit. Clear now? That profit, in that profit, you know that over this profit we need to make the one another expense. What is that? Tax. And that tax is also considered as one expense. That amount will be refunded or reduced from their expense, okay, or added with that expense. Means if profit is got as at the 5,000, most probably that when tax is adding, expense is increased, no?
Yes.
That means we are not having that 5,000 now as the profit. So that tax amount will also reduce from this 5,000. So we are showing that our last profit is at profit after tax. So in this profit or that last profit, we can reduce that depreciation also. That means like other expense, we include that depreciation is also as a expense itself. You understand now? Even though we are not paying cash, you know that already we paid here 2,000 rupees for this board. Now we are not paying that. Already expense we met. When we purchased that board itself, we paid that expense. But still, after that again we are writing off that value from the book every year. That is according to its usage. Got it clear now? Yes. So you may think that it is double that expense is taken place. Then the tax authority will not allow. It is not like that. The tax authority will accept for that some different methods are there for calculating this depreciation. They will suggest in which method we need to calculate that depreciation. We cannot reduce that. There are certain rules and regulations are there. Something you will learn now, means in this class, and something in your higher classes you will learn. But the basic things is that once you already we met the expense, again in the form of depreciation, every year we will reduce that a particular amount as depreciation. Got no? And after reducing, that is accepted by the tax authority, after reducing or after charging, we normally in accounting terms we say that charge against that profit and loss account. Means whether profit or loss, whatever is that, we will reduce this from that the profit and loss account. After reducing this, sometimes loss may come. Even though we will not consider that, okay, here we reduce it that 10,000 for all our asset, depreciation come as at 10,000. This is expense. Actually, we didn't pay that much amount. But even though we write in the expense, and we got that profit is only no profit, only 1000 loss. In that time also we will not change this expense. We will not consider that okay, here we didn't get 10,000, which is we already kept aside for accounting, that is expense itself. You understand now? This amount we are not paying to anybody. This depreciation amount we kept aside, even after that, even after reducing this, if loss incurred, then nobody is going back and taking this. Okay, we have now 9,000 only actual loss. Actual profit we have 9,000. That nobody will say. After reducing this, nobody will say that. Everybody will say that this is loss itself. Clear now? Means even though we kept that 10,000 apart, that is as expense itself. So the tax authority is also considering the same. Another is that true and fair financial position. If we want to get that our profit and loss account and balance sheet as properly or fair and true, then we need to reduce that depreciation. If we are not reducing depreciation, we cannot say that our profit and loss account is not clear or correct. Why not? If for example, if we are not reducing this expense, depreciation expense, then our profit will be increased. But you think that in a school, in our school buses are there. Some are very old. No? So every year the school, what they are doing, they are keeping a certain amount as the depreciation for that particular vehicle. When that vehicle is completely failed or damaged, it can easily replace. Money is already there, or almost some money is there. If it is not complete amount, but a part of that money is there, they can easily replace it. Clear now? And if one business, they have some old assets, maybe that business is running for 10 years, and when they started that business, they purchased some vehicle. Okay, you imagine that this is a delivery company. That company itself is undertaking that deliveries. They have some staff, and every day by van or by that some vehicles are there, 3-4 vehicles are there. They are delivering that goods to different shops. So after 10 years, they didn't replace any of their vehicle. They are still using the same one which they started. Now it is almost 10 years. It is almost 10 years. But what they didn't do, they didn't show that depreciation up to this time. Clear no? Now when they purchased that van cost rupees 7 lakh. You imagine that van cost rupees 7 lakh. They used it is for 10 years. Still they are showing in their account as a 7 lakh itself for that vehicle. You got clear? And almost in this year, like that they didn't reduce any of their asset value. What they purchased, still they are maintaining in that account as the same way. Then in the 10th year, they are going to sell their vehicle or that business. Complete business, you imagine that they are selling. Then according to this value, they calculate that everything. You understand now? But one who is going to purchase that person or persons may not agree that, because you can see that if a vehicle used or asset used for 10 years, its value is that much reduced. We cannot consider that value as in the beginning. The beginning it was 7 lakh, okay, agreed. But after the use, value is reducing. They can charge or they can collect amount for their goodwill. They assume that the goodwill, okay, this business it is having this much name. Okay, if one purchasing, they will get this much benefit. On that basis, we are purchasing something now. On its goodwill, how much value it is there in the market according to that. But if any asset is old, that value will automatically reduce. If it is not reducing, that is not fair. We will not get that correct profit and loss account. In that case, their profit in the whole years is very high, maybe very high, because they didn't reduce that expenses. All expenses are not come under that expense head, or in the profit and loss, all the expenses are not mentioned. Even though according to that our accounting rules and regulations, you know that even the owner is working in the firm. Normally, if instead of that one staff is upon how much money is assuming, the same must be assumed for that owner also. You understand, no? That means we consider that is separate entity concept. Owner and business are we considered as a separate. The same way here also, what must we do? We need to reduce the depreciation. It is very important, otherwise we will not get that true or fair figure in the profit and loss account. And another is that compliance with the law, and law is also enforcing to maintain that depreciation. Next topic is that factors affecting that the amount of depreciation. What are the things affecting that the depreciation?